Right.
All right. Thank you very
So
much.
I want to say a very big thank you to the Echo Innovation team. Thank you for having me. Right, like you rightly said, I was.
Is there a problem? I think she is probably having some technical issues with respect to. Oh, she's back. She's back. Hello, ma. Mrs. Ajila. Can you hear me?
So apologies for that. I don't know what happened. I just.
Okay, she's probably having some serious issues with her network. So before she gets back, let me just quickly run us through. What I think about financial intelligence. I've been in different master classes about financial intelligence and learned so many things. Oh, she's back now. Hopefully, she can just take up from there. Okay, is she in? I'm not sure. These things happen sometimes. I don't know. It's the network where we're all burdened to carry and to use in our in Nigeria.
Please, I have to enable 2 of my devices so that if one votes me out, at least I can be on backup.
Well, that's fine.
Okay, so I think the second one I'm not you are not yet accepting me, so I'm going to try to come in again so that just to have this 2 level okay.
That's Stoics Consulting, yes.
Right, I'm going to try to yes.
So. Okay. All right, you admitted now.
Okay, fantastic. Right.
Okay.
But that one is also dropping, but I just want to believe that we'll try as much as possible to still have a good time. Right. So please, participant, bear with me. I'm going to have to share my screen shortly and see how we can compensate ourselves for the time, couple of seconds that we have lost. Okay. All right. So again, I want to say a very big thank you for the opportunity to be doing this together. So I'm going to be, we are going to be discussing as businessmen in the house today and businesswomen. And we'll be interacting with the topic that I call financial intelligence for business owner. But before we get to the core of the conversation, which is financial intelligence as it relates to business owner, business founders, entrepreneur, whichever name we want to give to it, I do really like us to start with some level of business mindset, right? So I'll be asking a few questions. Can I have the admin display my pool? Right, I want the pool to be up. And the question that I'm asking from the pool is to say that what attracted you to business? Why business? I mean, there are quite a lot of other things that could have caught your attention. It could be the corporate world. You could have been doing something else in NGO. You could be a ministry person. You can afford to even say, I just want to be a sit-at-home mom or a sit-at-home dad. But you chose the path of being a businessman or a businesswoman. So I do really want to know the reason behind choosing this path. So why are you in business? And I'm asking, is it for you to be able to build legacy that transcends the current generation? Just like First Bank or Union Bank that have been existing for like over a century? Is that your reason for being in business? Or is it to solve specific problems, right? Maybe you're just passionate about changing the world. overcoming obstacles, helping the world to have a different outlook. So what is it for you? Or is it to maximize wealth? You want to join the league of the Dangotes and your $10, right? Is that the reason why you're in business? Or are you there to transition? You're more or less preparing your retirement plan. Oh, you don't want to retire at 60 and still trying to figure your way out. So, Admin, I can see the pool from here. Please, can you confirm to me whether the screen, the pool is up? Hello?
Yes, it is. It's in the chat. People are replying in the chat.
Fantastic. So, you're going to have to paste the result to me. Then, since it's via the chart, so that I'm also able to relate with the result. Right. So maybe in about 30 seconds from now, we can probably try to hang the poll so that we can interact with the results. Right. So, and the reason why we're trying to lay the foundation with the mindset behind coming to business. If you don't understand, I think there's a proverb that says that, or an adage, that if you don't understand the purpose of a thing, abuse is inevitable.
Yep.
I mean, if someone just walk right into my office and you deliver a very huge carton, and I mean, I don't know what that carton is used for. Maybe it contains a 85 inches TV, but I don't know the purpose of TV. And I'm seeing a very huge box. And I just think that it is a platform to which I can stand to get something from my roof. Because the purpose, I don't understand what the purpose is. And I even just think that maybe it's something else that I can always just relax on the surface of that carton or stack things up. That's because I don't understand the purpose. So many of us as businessmen and women, until we get to the reason, the main purpose that is driving us into business, we might just not be able to get the ultimate out of that business. Thank you so much. Right, so I'm saying the pool now, but it's still showing 0%. So I don't know whether me is seeing something different.
Apologies, they were responding, they were typing their messages in the chat. But...
Oh, fantastic. So I think it's populating now. I can see it's populating now. Currently, we have about 0% saying legacy, alluding to legacy. We have about 60%, 67% now saying to solve specific problems. All right. Then we have about 14% saying to maximize wealth. Then we have about 13% saying to transition. That's their business is their transitioning plan to retirement. Fantastic. So the model group is what I'm going to go with now, which is to say to solve specific problem. And I mean, this kind of make my job today so easy. You know what? Because it means that I am within the right audience.
All right.
Right. The reason for you to be in business, the main reason if you will be successful in business is to be on a quest to solve a problem, specific frustrations, or to fix certain level of efficiencies. Right. That is the push, the right push you need as an entrepreneur to be in business. And I'm so super excited that a huge number of people in this house understand what it is to be in business. We're going to be going quite pragmatic about it. The starting point itself, like I said, the real foundation is to understand the fact that you must approach business from a problem-solving approach. It's not because I have a passion. If you have passion, it's not sufficient. If the area in which you have a passion is not really the pain point of certain set of people, that passion cannot sustain you in business. If the reason is to make money, trust me, maybe to pick a 9 to 5 really even would be far better off for you, because we don't come to the world of business and perform abracadabra and begin to make money quite immediately. So in about 2 to 3 minutes, I'll try and lay the foundation of how this works. So the journey of business starts from those 3 things that I mentioned. Maybe you envision certain inefficiency in your environment or in your system, or you notice you perceive a certain level of problem, or there is certain level of frustration that you notice that people are going through. If you establish that, the stage 2 is for you to now validate that particular problem by asking yourself the question that, is it the kind of problem that anybody will want to pay money to solve? right? Because if you are able to identify a problem, but unfortunately, nobody is willing to pay 1 naira to solve that problem, I'm sorry to say you are not yet exam. Maybe you identify a problem city or in a particular street, in a particular town, they have issues of potable water. It's a problem, right? It's a frustration. And you're thinking of building a business around that problem. And you think of sinking a borehole. But nobody in that town or village is willing to pay as low as 1 naira, talk less of 500 naira to buy the water, because they believe that water is a natural gift from God. So why should anybody sell water to them? As fantastic as it is that there is a valid problem that is existing, because it is unable for you to monetize that problem in that environment, then you don't have a problem, you don't have a business. It will literally look like a charity or a philanthropy exercise. So I've spoken about two things: your ability to speak to certain problems, frustration, or inefficiency, the ability to be able to monetize that venture. Are there people that are willing to put money to solve that problem? Number 3 is to say that who are the set of people that this problem is affecting? Who are the set of people? Like I mentioned, it could be a particular community. It could be certain sector. You must be able to identify. You shouldn't. You can't sit down and begin to use your brain to just think it through that, okay, and when I permutate and when I design this product, the product to be attract its own market. No. You need to go to the market with a clarity of who that product is designed for. And the last one I'm going to touch before we go to the heart of our conversation is that you must have a compelling solution for this problem. And your compelling solution is not a solution that another businessman is bringing to the market. It's not what your friend or your competitor is bringing to the market. It's that very thing that stands you out from the crowd, right? So when I see people that say that, oh, you know what is trending now is bottled water, and you run to the market, you also want to take a piece of the market. It doesn't work that way. What works is that, okay, I am coming to the market. I know there is a shortage in potable water, and I'm coming to this industry. But hey, fellow businessman, hey, fellow businesswoman, what is that additional value proposition that creates a star quality in your product, separate and distinct from the other competitors? Haven't laid this foundation of what actually validates our mission as businessmen and women. I must say that it is important for us at any stage of business you have, whether you're a startup, whether you're trying to grow, whether you are growing to maturity, or there is some form of decline setting in your business, it is important for you to understand and appreciate the power of data, which is what we are going to be speaking about today. Sorry, my slide is hanging. What do we do? So, okay, right. So it's important for you to understand what data can do for you in your business. And you know, a lot of businessmen and women are so guilty of this. Oh man, I'm operating a staff of less than 5. It's just me and my phone in this business. So how can I be able to put my data together? I don't even have a financial report or anything to tell me how my business is faring on a weekly basis or on a monthly basis. Oh, tax people are around the corner. How am I going to handle myself? As you are planning your business in terms of the location, the website, where my customer is, it is important for you to also plan how you will be accruing your data, right? And I mean, you don't have to grow to a very standard structured. Maybe when you now have a glass house office and you are able to have 20 people on your payroll before you begin to organize your data together. I think now they say that data is the new gold, right? Because if you don't have data, you don't even know which of your product is doing best. You don't even know which of your product is accruing is making the highest contribution to your bottom line. I dare to say that you don't even know the demography of where your real customers are located. So your financial intelligence permits me to say are the insights of how your business is faring, right? Without so much going into the textbook knowledge, is the insight about your business. And that insight permits me to say that you cannot have an established insight if there are no data. Let me give you an example of this I can relate to it. I'm not seeing my chat now, but I will need you people to really, you all to interact with me a lot via your chat box. How many of the participants here today are quite active with your Instagram accounts? There's a little exercise I want to do. So I'm going to my chat box now. I want to see. Can
I respond to?
Yes, please. Yes, please.
Okay,
you can.
Cool,
Right.
All right.
So I'm going to be speaking to you directly now, Edwin. You notice that if you put up any post on Instagram, and if you go to Insights almost immediately, you're not going to see any information if you're using a business account, right?
Yeah.
Why? Because that particular post is still trying to gather data.
Exactly.
Until after a certain period of time, when people begin to interact with that post, maybe they like, maybe it's been seen about 5-10 people. That's when you begin to see insights, and the insight begin to tell you how many impressions, how many of these people belongs to your followership. How do they even get to interact with you? Is it from your hashtag, or is it from your
how do they find your posts? Yeah,
exactly. That's exactly what some of these data do to our business. So when you don't keep data, you don't even know where your customers are coming from. You might be concentrating on Lagos market, and you discover that 80% of your customers are coming from Abuja, or 70% from Ibadan, or 60% from Port Harcourt. And what would that tell you as a businessman? If you are having such insight or intelligence, or your data is telling you, you might probably be thinking of how you can get the product closer to them, either by having like a small cell office or a branch office, or looking for like a liaison officer. But if you're not keeping the data, how will you be able to know how to serve your customers better? So just to relate to with what we have in the slide, so I did try to define financial intelligence as the process of collecting business data and turning it into information that is meaningful and actionable towards a strategic goal. So if you notice, I try to put up a red color to some of the action words that I have in this definition, and it's to say that in financial intelligence, data is key. You need to accrue data together, and now those data are not meaningful by sitting in your ledgers, in your logbook, or in your Excel form. Right? It needs to be better processed into a refined information. And until you refine your data to say that, okay, I made a sale of 10 million naira in November 2021. Out of the sale of 20 million, how many of them pay cash solely? Okay, 70% of them, which is about 14 million out of 20 million, pay me via cash. About 30%, equivalent to 6 million, pay me through credit. Okay, you go further down again. Those 6 million naira, which is like a credit, says, how long or how quickly does it take me to convert my credit to cash? Does it take me 90 days? Does it take me 60 days? Does it take as low as 30 days? Then you cannot begin to ask yourself questions. That if it takes my debtor to hold my money for up to 90 days, and me, I'm paying my supplier as early as 30 days, you know there is a mismatch. Right? So it means that my own money can sit in the hand of my debtor for like 90 days, nothing happened, no shaking. But my own kind of creditor will say, right, creditors will say, oh no, I don't operate more than 30 days credit facility. So what is that data telling you? Is either you also collapse the number of your credit terms, or you look for supplier with relatively longer credit terms. Otherwise, you will have a mismatch in your cash flow, and you will soon begin to have issues. And all of those, like we said, the data is important, the information is important, but they are just not important in themselves. It's not a standalone kind of a thing. It is important so that we as businessmen and women can achieve our strategic goals. And I mean, when you come to business, I don't know. you don't come to business with just the facade of the fact that I am in business. And I know that there are a lot of people that they are just in the business for the sake of saying that, okay, we are also in business. But I'm sure that we don't have such categories of people in this forum today, on this call today. I'm just assuming. But if we are really in the business for the reasons that we all agreed to, something must be driving you. And those things that are driving you, they shouldn't be on your head. They should be written down in a paper, or better still, in your iPad or in your laptop. And those things that are driving you, they are what I call your purpose. But those purpose, you can't achieve any purpose without certain or collection of goals that you have put together. And I will break it down. If your purpose in life is to say that I want to establish this business in order to be able to say, in order to be able to gain financial freedom, that would be your purpose. I don't want to rely on anybody. I just want to have financial freedom. I want to be able to spend my money. If that's your purpose, what are the collection of goals that you have put together to be able to achieve that? So all of those goals and the strategies that you put together, you must be able to measure them from one period to the other. And I will relate with this more as I go into the slides. All right. So I'm going to be sharing with us about seven matrices that we need as businessmen and women to relate with, to ensure that we are actually facing our business deliverables. And sorry, I won't be reading this one by one. You can just quickly interact with those slides as I move on to these 7 KPIs to watch when scaling your business. Right. And number 1 I'm going to be talking about is your cash flow. Right. And in a layman's language, your cash flow is the amount of money that is coming into your business and the ones that are going out. It's like a traffic. You know, in traffic, it's not a one way. Some people are moving, some people are coming. So it's a two-side thing. So, and your cash flow, many a times, businessmen and women, especially the one without financial acumen, many a times misinterpret their cash flow with their revenue or with their profits. So I'm going to be talking about this using a classical example. If you, for example, if you're a real estate developer, right, and you plan to develop 4 terraces in a beautiful estate in Omole, and the construction cost plus the cost of land, you have done your project economics, and each is construction. I'm not talking about the amount you will sell it. So your cost, each unit is coming to about 55 million, right? But you know that this product I can sell as high as 85 million. And you put that together, maybe when you do plus or minus, you discover that you can make conveniently 40% on that investment, on that project, which is your profit, 40% profit, right? But that project is going to take you 6 months. So the entire 4 units you are developing 55 million, that's like a 220 million project cost that you need across 6 months. Maybe your cash flow is looking like that. In month 1, you will need at least 60 million to cover your project expenses for month 1. For month 2, you will need about 45 million. So if in your month 1 that you require 60 million, and you only have equity of 5 million naira in your account, and bank you are only able to raise additional debt from bank up to like 20 million, totaling 25 million. Maybe you are lucky to have off-takers that are willing to give you some cash before the house is ready, maybe additional 10 million. Totaling together is about 35 million. You're going to stress over that project, you know, because your required cash flow to move the first month is 60 million, but you only have 35 million available. Even though the project is so fantastic in terms of profitability, there is a 40% profit that you are looking at. But you know what? If your cash flow is not balanced, if you are not operating a green cash flow, that 40% profit that you have targeted, you may never realize it because of a negative cash flow. In fact, that profit can become a loss. And I'll tell you the reasons why it can happen that way. If you waste time on projects, you are losing money. You will lose reputation because people that you have collected money from and anticipated that by this time I'm supposed to close out, I'm supposed to be able to pay you. They will begin to make noise. They can go litigation. They can go to begin to attack your brand. Your contractors will continue now begin to dance too because you can't pay them as at when due. So, and that's the reason you will see some people tell you that the life of a business itself is the cash flow. Is the cash flow. So the totality. So what are we saying? Don't just plunge into any venture. Oh, in trading now is China. We are all going to. That's the trending thing. There is money in. Have you sit down to count the costs? Have you looked at the side of your cash flow? How much you are able to that your business can attract in terms of cash flow to be able to float that particular new project? Are you actually looking to what is going out and what is coming in? So one of the success factor of any businessman is to ensure that you keep your cash flow on the radar and ensure that at any point in time your cash flow is growing. You mustn't be planning for a cash flow that your outflow will be greater or higher than your inflow. It's usually the beginning of problem because you will now begin to have defaults. It will make you to take different kind of business decision that ordinarily you wouldn't see yourself taking. So moving on, we'll be talking about working capital. And I like to refer to working capital as the totality of cash that you have in your business. The totality of the cash or near cash. So working capital measures your liquid asset that meets your short-term obligations, which includes, it can include your short-term investments. It might be your account receivables. Your account receivables are your money in the hand of your customers. Oh, he bought a 18-karat gold from me. He's meant to pay next month. It's part of your near cash. So it's part of your cash flow. Oh, my business is doing savings with so company. We have a fixed deposit with Zenith Bank. It's part of your near cash. It's part of your working capital. All the money you have in your till or the money you have in your bank. So what we are saying is that your cash flow, how you measure the prospect of your business is that at any point in time, we often advise that at least let your working capital, let it be, if possible, as twice of your current obligations. And I will explain. But worst case scenario, let it be equal. I will break it down. I don't want, as much as possible, I don't want to speak too much of accounting language. So I'm trying to relate in the most simplified way. So this is your working capital, like I said. You have current obligations. Your current obligations might be your suppliers that you are owing, that you bought raw materials for. It could be the rent of the building that your office is located. It could be anything. It could be interest that you're supposed to pay bank on the facility that you're using. And you also have current assets, which your current asset could be your money sitting in bank, the one in your till, the ones that your customers are owing you. And we're saying that for you to run an healthy business at any point in time, your current assets must be twice your current obligations, your current liabilities. So what you have in your bank, in your hand, in your till, in the hand of your customer must be at least times 2 of what you are owing your suppliers and some other payables. And we're not saying worst case scenario, if you cannot achieve twice of your current obligation, then it must be equal, the minimum. Otherwise, that business is going to strive. So what do we mean? You discover that it is rather too late when you are taking those such decisions to now begin to aggregate, is my working capital balance or not? You plan this ahead of, let me say, your month or your week, depending on the financial period you have subscribed to. You need to consciously and deliberately plan it. There's some desirable thing that you might love to do as a businessman, but when you sit down, you look at your working capital, you definitely know that this is good, you agree, but this can't definitely happen this month. Maybe we wait till like another 1 month or another 1 quarter for the business to be able to do it. That will also guide the kind of obligations you enter into, or the promises, commercial promises that you make. Because when you make some promises, There are legitimate expectations. So before you go make some promises that are really going to put stress on your business, it's important for you to plan ahead to ensure that you have an healthy working capital. All right. So moving on, sales growth. For any business that is going to be sustainable or that is going to be able to outlive its owner, growth is something that is very important, except you are not for profit. If you are an NGO, it's really not a problem. But if you are really a proper business outfit, we should really be speaking of growth. What I mean is, if you have a child and at the age at 18 months, you are still feeding him with cereals, and at 3 years, you are still feeding him. At 10 years, the same thing. At 15 years, and I need response. How are you going to feel as a parent? How?
Well, I have 2 of them.
Okay.
So if at 3 years old I'm sleeping in with cereal, I'll be very disappointed.
Very disappointed. Fantastic. Yeah. I like that feedback. In fact, there can be a better way to put it. You'll be frustrated, you'll be disappointed because you expect more from that child at that point in time. And so is a business. If you have a business and year 2, you're still crawling, you're still hovering around the same kind of sales, the truth of the matter is that after a while, there will be frustration because every human being, there is a penchant for growth inside of us. We want to be able to do bigger things and better things. And unfortunately, some of us leave it at the level of desire. We are not quite intentional about it. So what we are expected to do is that, and it's a good time of the year, 1 year is ending, ask yourself, what do you want to do next year? In some of the businesses that I'm involved with, either as a co-founder or as a board member, virtually all of them, we have ratified our budget for next year. And I'm going to use the example of let me say, the youngest out of all the companies that I'm involved with. The company is trying to close the year with like annual sales of 300 million, right? Because they're already on like 280 something million. And the plan is next year budget is a 1.2 billion naira budget. Someone can come and say that this is a tall order. That's almost like doing 400%. You just want to close the year with 300 million or barely a little above 300 million. And you will now want to go and do a billion. But ask me, as an investor in that company, am I convinced that they can do that 1.2 billion naira? Oh, yes. And why am I convinced? Because we have already put it on paper and it's looking good. And we are just not putting it on paper. There are strategies to build it. There are certain markets that we are expanding to. And recapitalization from core investors are also part of the, we are going ×3 of our current working capital. So wait a minute. So much is given, much is expected. You're not going to have shareholders injecting him more capital. And you will now say the same thing you did this year, you will do. It's just like the story in the Bible, the story of a talent. Someone was given 5, another 2, another 1. The one with 5 came back with 5 more. The one. So is there an exponential theory? You can't be operating with 10 million naira, you are generating 1,000 naira profit. And you moved to 50 million, you still want to be generating the same level of, because that's the problem I see most businessmen making. Either as our revenue is increasing or our profit is increasing, our cost is also matching it. So it makes that growth very difficult. So that growth is not going to be visible. Maybe as at the time you are doing 100 million naira turnover, and many a times entrepreneur makes this issue. Once cash is coming in, your revenue is coming in. We are almost seeing that cash as if it's the profit. No. If you have not been committed to having a monthly profit and loss account, make it a call of duty from next year. That's what shows you the snapshot of your business. How are you really making money? Money can be inflowing in and out, and you are in loss. But if you are not putting this to pen and paper, how will you know when you're in loss? How are you going to make necessary adjustments? Right? So I won't dwell too much on that because there's another leg of that I'm going to be sharing shortly in some of my other slides. So another thing that is important for us to do is also for us to aid our sales revenue. I've spoken about sales growth here, sales revenue, and you set your sales growth as a function of percentage, right? Maybe this year you did 100 million and you want to grow year on year. Some organizations have policies as to say that at least my year-on-year growth is 20%. Some are as bold as saying 50%. Even me as an individual, not a corporation, I have a sales growth percentage. Every year I want to increase my wealth year on year with a minimum of 25%. And I have strategies to do that. Part of the strategy is that any investment that I'm doing, that some investment, if it's lower than certain percentage, I am not interested because it's not going to help me to achieve my growth. Then sometimes I do some low-end one and I dilute to some high-end one so that the average of it will still match my growth appetite, right? Even in terms of, so if an individual can go to the extent of drawing, what's it called, a sales growth percentage, then I think as a business concern, you should do much more. So this line I'm going to be explaining in relation to the last is your absolute sales revenue. What have you planned for next year? What's your sales revenue figure? Are you planning to do maybe 120 million? Maybe a 12 million? For that 12 million, how do you intend to achieve it across the 12 months? If you just leave it at that 12 million, I sell a week and I want to be able to make 12 million revenue next year, you'll probably not ace it. Why not break it down into months and say in January, at least I want to do 1 million. In February, you can flat it up, or you can look at the season of your product and say that in January, we'll probably do much more than December. So I'm allocating like 20% to January and December. Then the rest of the month, I can flatten it up and say that maybe probably 750 per month or thereabouts. What is that doing for you? You are keeping your eyes on the ball and on a short term. So if something goes wrong, it's easier for you to quickly adjust to the situation and deploy mechanism and strategies that can assist you to kind of ace your sales revenue. All right. So the next one that we are going to be looking at shortly is your return on investment, right? And this time around, I'm not talking about return on equity, but because we are businessmen and women, I do like to talk about your return on investment is your own money. You know, sometimes when you're in business, as a way to also diversify your portfolio, it's not all of your cash that you put in your business, right? I operate a lot of businesses, but I still have organization in which I give money to go trade, and you come back with my return on investment, right? And why am I doing that? Is a way to diversify my risk. It's not every day that the business will be good. As a matter of fact, I pay my return on investment foot up to about 55% of my business overhead. So if you have, for example, investments in Eurobond or in mutual fund, especially when you deal with seasonal or long-term projects, those investments can support your day-to-day overhead. Maybe you want to pay for rent, maybe you want, because some people deal with some business that they don't have everyday turnover, right? But you're going to the fact that you're not having everyday turnover. Maybe you're into real estate, but staff will collect salary every month. You pay house rent, diesel will run. So you could decide to have some of your capital in investment to be able to match some of those down periods. So what we're saying is that determine the return you want to get from your investment, right? I know people will say, oh, when you go to bank, barely 2%. Oh, yes, but there are a lot of investment outfits that can also do you 15, 20%, and they are secured. And I'm not talking about Ponzi here. The only thing is that before you begin to put your investment into some of them could be private placement, some of them can be crowdfunding. Before you go into those level of investment, it's important for you to understand investment beyond the paper. You will really understand the fundamental, in fact, and you will understand the kind of business that they are doing. And there are some that they already have the name, like the Stanbic IBTC of this world, the United Capital of this world. They have strong investments in bonds. Even if you don't have huge financial literacy and you put your money there, on every month you can check your returns, you can liquidate and you can help your business. So what is in it for you as a businessman? You need to be able to match your appetite level with whatever investment return anybody is promising you, right? And you must be able to also express your growth appetite. Like I told you the other time, I have a growth appetite of about 25% year on year. So probably someone like me, an investment return of 4% or 3% might not match my investment appetite. But again, I will not go all out on Ponzi people that will promise me 50% or 100%. No, I'll literally now do a mixture of here and there. I could do an euro bond of about 8 to 9% per annum, which I'm doing. I could look for a decent company and do private placement with them of about 18%, which I do, right? Right? And by the time you're aggregating the 18% plus the one of the 19%, worst case scenario, I'll be averaging at about 13-14%, which is not bad. And some other direct profit or inflow coming from direct businesses or rental income would definitely aggregate and give me VRS minimum of my 25%. So what I'm trying to say as businessmen and women, you need to, until you have that established, you might just be saying, my business is doing fine. Maybe that doing fine is just your own personal opinion. Have you really put it? Maybe when you put it on paper, or you see what others are doing, or you're able to match. And I'm saying, like you say, you can imagine what it looked like if your business is growing at a rate of 20% every year or 25% every year. You want to imagine where you would be in the next 10 years. And you can tell me that not all the time when we plan that we ace it, but at least there's something you are living towards for, other than being reactionary. Being reactionary in business is that whatever we are able to do, we do. But being proactive is setting a goal and a target ahead of you and ensuring that you live up to it. I think the twin of return on investment is also return on equity. Return on equity is that I've put 100 million in this business. What can this business bring back to me? If you put 100 million in a business and that business is always turning in losses, you know the implication of it. Your capital is going down. You are not adding to that capital, rather the capital is depreciating. Because from the capital, you will make drawing, you will pay salaries. And here is what I tell businessmen. If any return on equity for you doing business is less than return that you can get from investment, you might need to question the reason why you want to be in that business. Maybe for a short-term period while you are trying to stabilize the business, right? But going forward consistently in loss, and what you can get from return on investment can be higher than your return on equity. I think you need to go back to the drawing board to really do a lot of justification for why you are in business or the reason why you still want to remain in that business, right? Otherwise, you might just be better off putting your money in investment. And this is not to scare us away from business. This is to tell us that growth is an integral part of us being in business. And until we get to the level, and it's not a one-off growth, it's not a growth that, 2014 was our best year, we made profits. Okay, after 2014, what happened? Consistent losses. So he who will be sustainable in business must be somebody that have an established pattern of successes. Yes, you could have a one-off bad year, but the bad years should not definitely outweigh the good years, right? Okay, moving on. So we're going to be talking about gross profits, which I know each and every one of us know and we are familiar with. It's literally the difference between your cost of production and your cost of sales. Your cost of production can be, if you are a manufacturing company, all your direct costs, net of your sales. I've spent 7 million producing this 100 kegs of palm oil. That's my cost of production. And I've sold 10 million. The difference between the 7 and the 10 million is my gross profit, right? But again, as businessmen, many a times, maybe because we are not keeping record or because we are not quite putting structure around this, we tend to judge how well our business is doing by the virtue of our gross profit. is much more than that, because after your gross profits are also some other ancillary costs, like your cost of running the rent, the salaries, the fuel, and everything. So when you now put the additional costs that are not directly related to cost of production, when you net it against your gross profit, that's when you know your net is the real profit you are able to, the real value you are able to drop to your business at the end of the day. So usually your net profit is your gross profit minus other expenses that are not directly related to the cost of production. You net it. So some people can be down with 30 million as gross profits, and because they unnecessarily overbloat their expenses, they can end up in a loss, right? I've seen companies like that. They are able to achieve gross profit, but other overheads, they are so huge. Maybe the overhead is coming to 50 million, and they will only achieve a 30 million gross profit. So at the end of the day, their net profit turn into loss. So what do we usually advise businessmen and women to do? It's important for you not to only cut your coat according to your size, but cut your coat according to your fabric, right? If you are not at the level of buying official cars for all of your staff in such a way that you have to be putting fuel in all of your cars, don't start yet. Because all of these things, they will hit your bottom line. In fact, if you cannot afford to be running your business in a plaza yet, even if all you can afford is on your social media and in the corner of your room, please be patient on yourself. You will definitely, the journey will get better and fairer someday. So that you don't begin to take on a lot of expenses that will eat your bottom line. And at the end of the day, when you're not profitable, it puts stress on you as a businessman and as a businesswoman. So going forward, I'm going to be sharing with us 4 tips before we draw the curtain today on the financial intelligence to embrace as founders and as business owners. Number 1 is to say, please leverage on technology. And I know that we live in this part of the world, people just, they don't want to hear, say, even if it is going to make their life simpler and better. We have conditioned our mind to say that technology is difficult, technology is expensive, technology is, and some people will even say it's not for me. But let me do a little bit of a mindset shift for you, that if you are a businessman or a businesswoman in this century, I'm not sure you have a way to exist and to survive in business without integrating with business, because it literally make life easy for you. You can automate something that you can do with somebody. Let me use an example of Mailchimp, and I will use the kind of way Eco Innovation has been communicating to us. I'm not sure the number of people they have in their email list, maybe 1,000, maybe 10 million. But with the power of technology like Mailchimp, you can send a personalized mail to millions of people at a go. If you don't have technology, and some people still prefer this hard way, they will say they don't like technology. So they will not mind typing that email one after the other to say, Dear Seun Adeoye. After sending that one, they will go and edit again and say, Dear Ken, Dear Lau. So which one is harder? Is it you that you are editing it one after the other, all in the name that you hate technology, you think technology is not for you? Or me that I decide to go and learn how Mailchimp operates, maybe spending 2 or 3 days on a master class to understand, then at a click of a button, I'm blasting mails, personalized mail, or not generic mails, to millions of people. So I think I would just want to tell us that for me, technology is easier than some of the things we are doing in Adway. Let me chip this in. I started driving with a manual car that was about 14, 15 years back. And the first time I was going to drive an auto car, it was like, what is this? I was almost having an accident on top Midland, but I did. But today,
I can relate.
But trust me, the same yours truly that struggled to drive auto vehicle for the first time. About 2 years after, my office then offered me in 2009, they offered me one Toyota Corolla. Guess what? Manual. I rejected that car. And I waited for additional 4 months to be able to get what's it called? And automatic. Why? I've tested the power of technology and what technology can do in my life. And I don't want to go back to what Yorubas would call ayalalu mole. You know, that's organic, that stressful manner approach. I don't want to go through it again. So I would just say that if only we open up our mind, there is a lot you can leverage as a businessman and women in terms of how the social media, the email, even the kind of software. Some people still keep their sales record in a logbook. It's not more difficult for you. Any data that you have in a logbook is a dead data. It only comes alive until when it gets into a system that is processed, then you can have a report generated. And some of this software, you can, for about $20–25, you can have a monthly subscription for keeping your accounting record. So I want also to embrace technology. Number two is also to have business emergency fund set aside. A lot of us businessmen, when the month is good and we make a lot of profit, we pull out the profit, we buy the car, we move houses, we move our children to the best schools, forgetting the fact that businesses are in circles. Right, there will be the peak and valleys in business are so real. So when you don't also match your financial planning to take care of the low period and the peak period, you discover that growth in such business is difficult. So I usually recommend for individual, I would say please have at least 12 months emergency fund for yourself. But for business, I would say please have minimum of 6 months emergency fund. And how do I calculate the emergency fund? I take all of our monthly business expenses. If it is 3 million, maybe 1.5 for staff salary, house rent, office rent, and other that overhead. Whenever we have a huge profit, I take certain portion of it to build emergency funds, so that when the hard days comes in business, that one will not turn our back against the wall. We'll still be able to keep going till things balances up again, right? The third one that I would like to share with you is to ensure you have insurance coverage for your critical assets. See, I know in this part of the world we don't like insurance, but the truth of the matter is that it just helps you to be stable. What will happen to you if you just discover that one of the huge machinery you are using in your office just got broken down? Imagine the stress of putting the money together. And I would like to use the example of the EndSARS that happened last year. A lot of shops were looted, but very few of those shops that are looted had insurance cover. The one that had insurance cover they weren't just compensated, they were compensated some up to 100%. And I have a live information of this. I'm talking about personal experience. So, and what does it take? Maybe you have inventory worth 100 million in your shop. You might not even pay insurance up to 200,000 in a year. So just make life easy for you. What about your car? You put in a Lexus of 54 million on the road, or a Toyota Corolla of 2 million naira on the road. On a 2 million naira Toyota Corolla, you will probably be paying 40,000 insurance premium for comprehensive in a year. Yeah, but you don't want to pay that 40,000 naira, but somebody can bash that car and you will require a 500,000 to fix it. Imagine that mental and financial stress at that point in time. So financial intel tell you to simply just pay that 40,000 naira and buy yourself that happiness, so that when everything happens, all you do is just give them a call. The last, which is absolutely not the least, is to say place yourself on the salary and discourage owners drawing. A lot of us business owners in this part of the world, what we do is drawing. It's my business now, it's my business account. They want to pay kids school fees, put it there. You want to go on vacation, you pull out of the business. And I'm not saying that as a business owner, your business cannot take over some of your expenses, but please put yourself on the salary. And the salary that you know that the business cannot afford at a certain point in time, you don't have to put it on yourself. Yes, you want to sound like a MD CEO, you want to feel like a MD CEO. If a company that is barely doing 5 million revenue in a month, and out of that 5 million revenue, your profit is not more than 5 million, and you want to pay yourself as the MD CEO 3 million, the staff salary will be there, will pay rent. That business will know it can't grow. That business is just there to serve you. So it's usually good for us to put all of this thing, put reasonability into the business. But I usually say something also, right? you might look at the input you are giving to your business and really say that, yes, I deserve to earn up to 5 million because on a monthly basis, I put in about 16 hours of my time into this business. No wahala. But what you can do is this. If that business is yet to grow to the level of paying you 5 million, you can do yourself a contract of 5 million. If it is 500,000 that business can afford now, pay yourself the 5 million and the balance, let it be going into a ledger that the business is still owing you. Maybe the day in your month 20 or month 36 when the business is stable, then you can begin to earn the other outstanding allowances. But ensure that you're committed to the business. Not everything that comes into the business that you will hit, because you need to also be able to retain profits. Any business that will grow must have a fantastic profit retention policy. At this point in time, I want to say very big thank you to you and to the organizers. Thank you for having me. Thank you for listening to me. And it's at that point in which I'm going to release the floor back to the moderator to be able to moderate likely question and answer that we'll have from the floor. Thank you very much.
Thank you very much, Mrs. Ajila. I think it was like 5 minutes ago, I just checked my time. I'm like, wow, from this far. And that's how much engaging it was. So thank you so much for your time. I mean, I'm short of words because I think I've learned a lot and I'm just absorbing all the information. I was taking notes on my phone, and I'm just seeing a lot of things that I've seen both myself and people around me doing, and I'm like, wow, we've been in the wrong for so long. And I'm trying to understand some things that have happened to me and friends of mine that are beginning to make sense now, right? I'll give an example. There was a friend of mine that got a contract to deploy a particular solution for a construction firm, and he got they require that he uses an APG, but because he's a software guy, he doesn't really have buildings, doesn't have any assets. The bank said, "Oh, okay, we'll give you an APG." But in the fine print, they said that before they can release the money to him, he needs to get a letter from the company saying that the bank should release the money to him, and the company should absolve the bank of all liability, and that's the only way I can get that money. So, which pretty much made the APG pointless. So that would saying for a whole year he couldn't access his money. He had to borrow money to secure the business, and of course, because it's not again back to collateral, he didn't have much collateral, and by the end of it, the business that was supposed to give him about 80 million in profit, ended up putting him about 30 million in debt by the time everything was over.
Right.
And that's it. And I remember when he got the contract, he was so happy. He was so like, oh wow, and like this is how we want to celebrate and everything. And when he was telling us this story, I didn't really understand, because we came out, he lost weight, he was stressed, it was everything. Like, right. I didn't how does the 80 million profit not cost or profit contract turn into a 30 million? How? I think I understand, and I understood the issue with cash flow. If you don't have the cash to execute, then you really are going to dig yourself into a big hole, and that you can't get out of. Right. And again, it's not even worse for us that the Naira is constantly and consistently and aggressively devaluing itself every month. So you see that within a 12-month period, what used to be $1,000 is now like 700. True. So if for any reason, but what happened to him was that because the cash was tied up in the bank and he couldn't secure the cash on time, all the POs he got to execute the project that were in dollars, the cost went up because Naira had crashed. So all the calculations he made, by the time he got the Naira out, converted the dollars,
he was what's off.
Right. So that's that's the thing that a lot of Nigerians don't even calculate, because you hear about, oh, I'm making so much money, and they don't even factor in the fact that if you're not making more money than the inflation is, and inflation is chopping from your money, Yeah, technically not making a profit.
Right.
So yeah, so that conversation that we don't a lot of business owners, and it affects everybody from people that sell fish on the road, people that do with high-end sales of softwares, people that deal with import and export. So many of those things, it affects everybody, and nobody, a lot of people don't really understand this, and it's really, really important. And I'm really glad that you took your time today to really put us through this process and make us understand how this works. Because even me personally, I've learned a lot today, and I know I'm going to have a conversation with my team and even my other teams, so many of my teams about this. And this is something we should be looking at, right? So thank you very much. So
thank you so much.
Usually I get to ask. Do you have any questions before people start?
I think I saw two already. I saw two already.
So if you're in doubt of how much you've done for us today, this is a proof, right?
Okay. So I would just like to answer Ganiyu maybe in about a minute. He's asking
someone asked the question before that. Can you just?
Okay.
I'm a believer in first confessor. So
okay, go ahead.
Someone asked the question: how do I plan sales revenue for services delivered to underserved community? Is there any template to calculate that?
Okay, so I saw that question, but I don't understand what she or he means by undeserved community. I don't know.
Underserved
community. Okay, yeah. I think any cash flow statement you can use for whether for any kind of business, honestly speaking, is not market based, because your cash flow is definitely talking to what is coming in for a particular period of time and what you are outflowing out. I'm sure I can share one template with the moderator that can avail you. Node that you can use for that particular project. Right. I hope that answers that.
Yeah.
Hello.
So then okay. The second question talks about should issues of cash flow limits, issue of cash flow limits, how big a business could embark on. Okay, I think what you're saying is that should my cash flow determine the kind of business I want to embark on?
Okay, so I will put that from two parts. You can dream big. You can dream to say that you want to be to outrun the likes of Zenith Bank in another 5 years. Dreaming, it shouldn't affect your dream. But what is important is that you can't afford to chew more than you can bite at a moment. Otherwise, you're overtrading. And when you're overtrading, it also affects the sustainability of your business. So what do I say? Yes. So what do I usually advise? And I'll use the last example that Edwin shared. If I were in the shoe of that man that had the LPO, rather than going into, it's difficult to go into any business with higher percentage of debt, especially in this kind of country that we are trending on double digits, right? So you could have subscribed, if you have that big dream and cash flow is an issue, you can look into alternative alliances. I usually recommend that we'll go into partnership. And partnership, I shouldn't go into partnership with somebody that look like me, because if it's somebody that look like me, what I have, you have. So what's the essence of that partnership? It must be somebody that, okay, maybe I have that link to bring the contract in, but you have the power of cash. So when we collaborate together, then that synergy is producing something reasonable. So, but I know that we Black men, we all have this disease. Mm-hmm. We don't want to be diluted. Mm-hmm. We would rather have 100% of our 1 naira rather than have the 1% of a 1 billion. Mm-hmm. But see, in the world of business, I think it's much more healthy. Whenever cash is an issue and you have a big dream and you don't want that dream to be limited, please go for a lot of alliances. You'll be surprised how much of alliances I have there.
Alliances.
It could be project-based and it could be a long-term alliances. Like that, your dream is not sitting down and you're not plunging your neck into a lot of debt, because some of these debts, they are big and they are strong enough to kind of stunt the business or cut life short. So I'll just stop at that.
Oh, awesome. Thank you so much. Thank you so much. Someone was accusing me of taking up the Q&A session. Sorry.
Oh my God.
I I don't know that means if I'm part of the audience. I need to. I'm here to learn. People think I just come here to moderate, and I'm actually learning with people. Sorry.
Oh my God.
Okay, so let me just give the floor to one more person to just ask a question, because I can see this is a very, very interesting class. And I know we're supposed to close by 6, but I'm just going with the flow here, and I just want you to be as involved as possible, because I understand that this is a very, very key topic. Does anybody else have a question? Anyone? You raise your hand. You can ask her a question directly. Okay, nobody. Awesome, great. So what I'm going to do now is that this is what I do every day, every week. I'm going to ask a question, and I believe that only those people who paid attention in class, sorry, in this session, will actually get it right. Okay, so I'm going to put the question in the text box, and I'm going to allow you. I'm going to indulge. I want to ask you, sorry, to indulge. Sorry, I'm going to ask to indulge us a little bit longer to, select the person who gives the best answer first. And that person that gets the answer correctly is going to go home with 1,000 naira credit, thanks to your selection. So it's all on you. All right. Do you agree?
That's the floor, right? The question is to the floor.
No, I'll put it now, but do you agree?
Yeah.
Do you agree to our terms and conditions? All right, awesome. So I'm going to put the question now. I'm posting the question now. Oh, no, this question's wrong. This question's wrong. Sorry, this question is wrong. Sorry, I apologize. That question is wrong. Yeah, this is the correct question. Sorry. All right, guys, give me a good answer. Anyone? Have you seen an answer that you like? Mrs. Ajila, have you seen an answer you like?
I've seen quite. Are we going to make it public?
Yeah, after that's the winner.
And are we going with the fastest finger?
Yes, fastest finger. Yes.
Okay. So if it's fastest finger, I think Adebayo already nailed it, which is working capital is the difference between your current assets and your current liability. A lot of other people are related to that, but it seems to be the first one to define it.
Okay, so what's his name again?
Adebayo Nassar.
Okay, Adebayo Nassar, thank you very much. You're the winner for today's Q&A. Thank you very much, Mrs. Ajila. Thank you so much for coming with us. I wish we had more time. I wish we had 2 hours. I hope one day we can have a session that is more interactive, that we can actually have a discussion, because there are a lot of questions I would like to ask, and maybe we will have another format of Techbiz where it's more of a conversation rather than a presentation, because I think in a topic like this, it really needs to be a back and forth between you that has the information and we that want to learn. So thank you so much. I appreciate you. Thank you so much. We are really grateful for your time. We're really grateful for you to come and share your knowledge with us, and we hope that as you keep sharing, you keep learning, and you keep adding more to us, and you keep adding more to everybody around you. Thank you so much. At this point, I'd like to say goodbye to everybody. Join us next week for another episode, and I'm putting my phone number there. Let the winner send me a message on WhatsApp. Sorry, I put 081450604. All right. Sorry. So just please send me an SMS on WhatsApp, and I would love to get back to you with your credit. Thank you, Ma. I was really pained that you didn't go too much so deep in the in how to really get that 25% in 25% what do you call it, return on your investment. But I'm guessing we will have to get, no, not today, but I'm guessing that we'll have to get back
I know.
to you.
I wanted to say, anytime you have a topic on investments, I'm sure that we can dive deeper into it.
First person on my list. Thank you so much. Thank you very much. Thank you so much, everyone. Have a wonderful week.
All right. Bye.
Take care, man.
Bye.